Hi everybody, I'm Hal Kirkwood, Instruction Coordinator for the Parish Library, and I'm here to talk to you about the difference between public and private companies. So specifically, companies are entities that transact business in a variety of different ways, from small mom and pop companies to major multi-million-dollar corporations. The important thing to remember about the difference between a public and a private company is that the size of the company does not matter. Small companies can be public, big companies can be private. And going public is a management decision. So as you start to research companies, it's very important to recognize the difference between these two, because it's going to be difficult to find information on private companies and easier to find them on public companies. So with private company, the private company is set up and controlled by either a single person or a very small group of people. The stockholders are usually founders, members of the family, key employees, something like that. And it's very closely controlled. The private companies do not have to file any documents with the Securities and Exchange Commission, the SEC. So there's no obligation for them to share their financial filings. They only have to file key documents mostly related to taxes and incorporation with state agencies and the Internal Revenue Service. Public companies, on the other hand, have to file dozens of different types of documents with that Securities and Exchange Commission. What this means is public companies are much easier to find information about because they have to file all these documents very publicly for their shareholders and for the U.S. government. An important thing to remember is that the decision to become a public company is purely a management choice. They are, in effect, trading some control of the company by selling shares of stock with those shareholders, and what they gain is the potential for a cash inflow of the shares of that stock being sold and traded. And thus that's why they have to make their financial information and other internal corporate decisions public to the shareholders. So with the documents, there are a variety of different documents, and we can try and zoom in on this a little bit to take a look at the fact that there are things like the 10K, which is an annual financial report that they must file. It's also sometimes called an annual, companies also issue an annual report, which can contain additional sort of very positive looking information about the company, but it has to contain that core 10K financial data. There's the 10Q, which is their quarterly financial filing. They file that only 3 times a year, the fourth being the annual report, the 10K. When companies go public, they must file an S1. And this sort of details what the company is all about, what's the market look like that they're trying to move into, and can be an excellent source of information. The 8K is a document that gets filed several times over time, where they have to announce certain events, corporate changes, executive decisions, and there are numerous others. And the best thing to do is to go to this link here and take a look at it. As I said before, size of the company is irrelevant. Any company can be public or private. There are many very small 10, 15, 20 person internet technology companies that are public because they're looking for that cash inflow. There are many major private corporations. Cargill is a good example of a major multinational ag product company that is private. So why is this important? As you look at it from a competitive context, it's really key to look at and determine what a company is so that you know where to go for information. If it's public, there are lots of documents that that company is putting out. If it's private, you'll have to go to something like an article database. You'll have to just look at their website to see what information they share. For job hunting, the same thing. To identify if it's a good fit or what kind of company you want to work for, the public company will have significantly more information than the private company. So you'll have to spend a little more time and dig a little bit deeper to find out about that private company. Also, you want to look at the companies within a market to determine what's the competition like, and specifically something like that S1 filing can detail some strengths and weaknesses of the company and some opportunities and threats within the marketplace to determine, again, how that company fits and what's happening in that market. So hopefully this has enlightened you a little bit about what is the difference between a public and a private company, and thanks very much.